Good evening, everyone. It's Jared here from the Alpha Capital Group. I'm here this evening to do a run through one of month-end price action today, 31st of March, and also a preview for tomorrow's NFP. So by the time this video is probably uploaded, will be early Friday morning, will be a preview for some of the key important data prints into tomorrow's NFP. Now, first of all, just before I begin looking at the economic calendar and obviously the charts, quick recap on the charts. We are running our live competitions now, so feel free to reach out to us on social media, on Instagram and the like, to be entered into the free draws for a chance to win 100k trading evaluation challenge. So definitely worth having a look at if you are looking to take your trading to the next level and get your hands on some meaningful, serious sizes of capital. Okay, so just before we start, first things first, as we look at the NFP preview of tomorrow, there's a couple of important pieces of data that I would be paying particularly close attention to. Now, the first one that I would be paying particularly close attention to is the average early earnings. Now, the reason why that is the case is because over the last 6 months in particular, and even maybe a little bit longer, depending on how far you look back, the narrative or the discussion regarding inflation has become much more pronounced in the markets. And the average early earnings will help to dictate the wage inflation that's now creeping in to the labor market. So I know we've looked at quite prevalently over previous videos in the last couple of months regarding how high the inflation data is. This week in Europe, we had Spain, Germany, France, and Italy all posting above expectation inflation levels, which of course that will affect not just the consumer price index, the CPI level, but it will obviously be factored into more expensive goods sector-wide within the economy. So given that we're looking at that into consideration within the US market, are we seeing the same inflation narrative also reflect into wage earnings and average early earnings? So that is why I'll be paying particularly close attention to that. The next two pieces of information will obviously be our non-farm payroll figure, which of course gives us our monthly number. Now, of course, we had jobless claims today, which came out marginally above expectation, and we had the ADP on Wednesday, which came out marginally above expectation as well. So I think the goal here is probably in the 480 to 500k remit. Of course, anything above kind of 520, 550 is obviously seen to be quite good for the economy, as the more jobs that's being created, the better the economic output. And of course, the stock markets tend to like that as a direct consequence. The last figure I'll be paying particularly close attention to is, of course, for the NFP data, the unemployment rate. Of course, 3.7 is the estimation. We will be seeing, does it come in on 3.7 or does it maybe tick back up slightly? So we'll be looking at these kind of 3-4 sets of figures very, very closely beyond that. Now, at 3 p.m., we do also have the ISM. So not every month does this always happen. Sometimes it doesn't. The ISM manufacturing index is always either a couple of days beforehand or a couple of days after, depending on how the dates fall in the month, depending on which Friday the NFP figure date falls upon. So this month, this time around, we actually have the ISM with the NFP on the Friday, which should give a little bit more volatility. So we've data before the US Open. We then have the US trading session opening at 2:30, and then we have the ISM at 3 p.m. So we'll be very much watching the markets right through from kind of 11, 12 o'clock in preparation for the NFP figure, right through to the course of the US trading session and the ISM at 3 p.m. as well. So that gives us a kind of a broadening scope of what we'll be looking at tomorrow in particular. Of course, as the figures become alive, we'll be watching it live. We'll be tuning in to Bloomberg and the like to be getting the details as soon as it emerges. Now, given that we've now looked at our economic calendar, let's look at some of the price action into the month-end trading. Now, of course, the big viewpoint that I had at the beginning of the week was the price action through the course. Could we sustain above this 45.90, 46.10 level that we've alluded to on Tuesday? Right through from about Tuesday afternoon, right through to this evening, the price action have remained fairly tight, fairly consolidated between 44.90 and 46.30, more poignantly speaking. Now, as we look at the price action this evening into the month-end close, we saw today at 4:30 on the FTSE. The FTSE moved quite sharply lower. I think it got about a 30-point sell-off literally within the minutes approaching the FTSE month-end close. But we saw the same sell-off again this evening in the US markets. We've seen the S&P undo a lot of, well, we're pretty much trading down now for the week, and we've undone a lot of the moves even made kind of last Thursday, last Friday, as the price action has come somewhat lower. Now, of course, tomorrow with the NFP, we could potentially see a little bit of a spike. We could potentially see the data roll over again further. I will be saying at this point in time, given that the price action has maintained this structured low, I suppose now into tomorrow, even if we do spike, will be, does the price action close back above this 4590, 4600 level, or do we see a further continuated sell into the NFP, into the open session, and through ISM tomorrow for a much more broader sell-off? Now, of course, if we look at the higher time frames, this sell-off today, yes, it's quite sizable when you look at it on an intraday level, but over the course of the last, let's say the last 2 weeks in particular, this sell-off of a mere, 70, 80 points is nothing insignificant to the 350 point rally that we've just witnessed. So we are seeing a little bit of a pullback now, but the price action is going to have to pave direction tomorrow with the NFP. So I'll be keeping a look at tomorrow. I suppose if you were to keep an eye on the indices, I would also be keeping an eye on gold, because gold tends to be a very volatile contract around the NFP figure as well. So those would be the kind of the two main contracts I'll be looking at. Yes, of course, I'll keep an eye on the DXY and the dollar currency index in the background as well, just to kind of make sure the correlations are in check as well. I do expect a lot of volatility, but given that the price action now has initially sold off from this key level, it'll be interesting to see where does the price action close into Friday evening. Now, of course, we will be back on Monday to preview the weekly close tomorrow. And I suppose we'll be getting ready for next week as well. So I suppose it'll be all said on kind of where tomorrow we kind of lay by tomorrow evening. All right. Now, Nasdaq, again, similar scenario, very, very similar in the sense that this is where we were traded all week between 15,250. We came into this massive level. I alluded to it. 15,250. We literally rejected it to a T. Price action we rejected. We sold off initially. We ended up engulfing the wick, broke through 15,000. And we continue to sell off today. I do expect probably 14,800 could potentially be revisited tomorrow, particularly if the tech stocks get a little bit of a hammering in the wake of NFP or ISM. So 14,800 will be an area of interest that probably will be worth keeping a very, very close eye on. And of course, we can see how that would be another retest of this 800 EMA handle. Other than that, the price action is firmly sitting through. So of course, we may even potentially get a spike back into this 15,000 level. So of course, I'll be watching this 14,800, 15,000 level with both of these areas with interest tomorrow. Last but not least, then in our indices section is of course the Dow Jones. Now the Dow Jones last week was in a consolidation between 34.3 and just slightly above 34,800, 34,850, not just underneath 900. The price action ground fairly steadily into last week's close, the beginning of this week. Price action then consolidated Tuesday, Wednesday into Thursday evening's close. And of course, month end, repeating this theme, price actions broken through. And even if you were to apply a simple structure like a break and retest strategy, you can see very, very clearly what's happened here. We've broken through, we've retested, we've rejected, and the price action has literally fallen off what would be nearly seen as the side of a cliff. It has completely nosedived into the close this evening, fairly heavy close. Now, of course, we do have a lot of untapped liquidations here. We've got a lot of price action here, maybe even here again. You can even see the shorter term consolidation zones here, where we've actually tried to break the structure. We've come back through. The price actions come back through. So it'd be worth seeing, how does the price action react off some of these levels here, particularly between 34,600 to 700 in particular. So I'll be keeping an eye on this area here to see how does the price action react, or if we kind of materialize with further declines and back into this region down here, 34.3. So we have some interesting levels to keep an eye out on. Of course, do I think that the price action is going to go back into 35,000? Yeah, well, let's just wait and see on that one here at the minute, because the price action has sold off a fair amount today, given the current price actions. Now, of course, just to round off the last few contracts, again, we can see how the DXY, if we look at this daily level on the DXY, literally back and forth, the consolidation continues. We've alluded to this last week. We've alluded to it earlier this week as well. This range of price action, of course, what's happened with the dollar picking up steam, the indices roll over. So the inverted correlation between the dollar and the treasuries, the need for currency against the stock markets is continuing to play out. Of course, the dollar has been weaker the last couple of days, And of course, today, as it picks up, the indices take that nosedive. But over the course of the last number of weeks, we're still seeing the dollar remain fairly consolidated. So you will see euro dollar, the cable selling off today. You will even see volatility maybe in the likes of Aussie dollar, USD, NZD USD as well. So some of these other FX pairs will have a bit of volatility today off the strengthening in the dollar. So worth keeping an eye on that one as well. Last but not least on our list is the DXY. So I was just kind of playing around with some charts this evening on the DXY. If I just go through this one very quickly, we can see how we came up to the 1960 level last week. We alluded to that. We sold off initially into the beginning of this week into this secondary relief area. The price action now has continued to kind of churn higher. Short-term higher highs, higher lows, higher highs again. We're creating this little bit of relief rally. Would I be expected to see a third run into this region up here? Absolutely not. And in fact, this is actually what I'm looking at personally into the NFP. Now, of course, our opinions have to remain impartial, so as we're not giving specific trading advice, but given that we've consolidated, we've manipulated the upside, we've manipulated the downside, we are seeing the relief rally back into this phase of price action here. Wouldn't be surprised to see the price action tomorrow during NFP potentially move higher to this region up here. Now, of course, we can also have the downside move and the price action to rocket it straight through back into this 1900, 1910 level. Of course, with the news, with the fundamentals, volatility will ensue as a direct result. Okay, so just keep an eye on that. We will do a proper run through on the price action on Monday after this. And of course, if we finish off with gold, interesting, or with oil, should I say, we had this massive structure playing out beginning of the week. Even if I just go up to the 4 hour, just to kind of make the charts a little bit more visible for yourselves. We had the top out, as we alluded to. We had a little bit of a relief rally back into this key area here, which also at that time played out as a 61.8, if I'm not mistaken, which it has done pretty much perfectly, bang on, 61.8, a little bit of consolidation, broken through, retested, and now we're testing this $100 mark. I suppose if you were to ensue this and you were looking for kind of this structure to continue, we would be looking for this 100 level to break near term, as I alluded to earlier in the week, and then looking to see, can we get this gap close into this 92.50, 93 level, and ultimately try and descend to nearer term lows within this current trend structure. But of course, still a lot to play yet this week as well. Now, of course, last night we did have some fundamentals in relation to the oil markets, given off the fact that President Biden in America did plan to release some of the strategic oil reserves. So their plan is to have 1 million barrels a day for the next 180 days potentially. So they're looking at a maximum of 180 million barrels over the next number of months to be released into the markets to try and curb inflation in food and energy prices, but more poignantly in the energy prices beyond that. Okay, so that pretty much wraps us up for the week, everyone. We've done the price action. We've obviously looked at all the kind of the key contracts of interest. We've done our NFP preview. So tomorrow it will be a wait and see to see how does the data play out, and then being able to react accordingly. Of course, risk management becomes ever so important during this time. All right. Have a great weekend, everyone, and we will see you all on Monday.